Ladies and gents, Mr. Harris here. Another video, the next video, we're going to talk about liabilities, okay? I want us to start figuring out the difference between assets, the difference between liabilities. So in this video, we already talked about the asset in the last video. In this video, we're going to talk about what is a liability. Let's get into it. AI is basically going to tell us. In financial terms, a liability is a debt or obligation that a person or business owes to another party. It represents a future cash outflow or the transfer of something else of value to settle that obligation. In simpler terms, it's the money or something else of value that you owe. Here's a more detailed breakdown. Liabilities are obligations, meaning a legal or financial duty to perform or provide something. Future cash outflow. They represent a future payment which could be in the form of money, goods, or services. Examples. Common examples include loans payable, accounts payable, money owed to suppliers, salaries owed to employees, and deferred revenue, money received for future goods or services. Balance sheet. Liabilities are recorded on a company's balance sheet along with assets and equity to provide a snapshot of a company's financial position. Current versus non-current. Liabilities can be classified as either current, due within 1 year, or long-term, due beyond 1 year. Now, I said a lot in that paragraph because there were a lot of financial terms there that most people don't understand. Here's the thing. We're going to talk about them one day at a time, one video at a time. But please, you have to take your financial future into your own hands to some degree. Now, I do get it. And that's why financial advisory to some extent is not going to be... Listen, AI, you ain't going to sit here and go to AI for all your financial questions. You'd be crazy, okay? Use it in accordance, but not to run everything. That's why people are still going to need a breakdown and understanding of what these simple terms mean. Because most people are not going to sit here and go through every single aspect of what was said to try to really understand and get it conveyed to their brain. Most people are going to want somebody to do it for them. Let's talk about it. First off, I want to say a liability is basically a debt or an obligation that a person or business owes to somebody else. Okay? It's very simple. Now, there's good examples of good liabilities and bad liabilities, which is a whole nother conversation. I want to keep it very basic in this conversation because once we start getting into good and bad liabilities, then it's like, okay, you're talking about good debt, bad debt, actually using debt to buy assets, whole nother conversation. For this one, I just want to keep it as a liability is basically a debt to pay an obligation. Now, what are some easily credit card debt, easily car debt, Klarna, all these Klarna people, financing fast food, these are all liabilities. Okay. Let's see. The cars, student loan. I would put the student loan into two categories, and it really depends upon what you studied and what the projected income that you're expected to receive once you graduate. You're going into engineering. Okay, great. You're going into communication and you have a liability on your balance sheet, so we have to, that's a whole nother conversation, which we're going to talk about, but that's a whole nother conversation discussing, understanding which is the best path for college. Okay. But another conversation, good debt, could be a mortgage, could also be a student loan depending upon what you're studying. I even think that a good debt could possibly be taking some assets and borrowing against the assets to buy more assets. That could possibly be good debt. If you're using the money or you're using the debt in a proper way to actually grow and make more money, it makes sense. Using the debt to just consume, go on vacations and do nonsense is not good for you, So those are examples of liabilities. Stay tuned. Whoa. Before you go, I want to pay attention to something. Balance sheet. Liabilities are recorded on a company's balance sheet along with assets and equity to provide a snapshot of a company's financial position. Now, this example is using balance sheet in reference to corporations, but please understand something. You as an individual, you are a corporation or an entity according to America, according to the money system here. You are an entity. And so the next video, I'm going to go into how you have to assess and look at yourself as a balance sheet, your assets, your liabilities, your equity, and then add in your income and expenses as well. That's how you have to really assess and look at yourself to really go forward and play the money game. All right. Thanks for watching. Thanks for tuning in. I got to go. Later. Have a great day.